you have traders there, you have users, you have tremendous amounts of capital, on that chain. But for some reason, you've got these massive markets and they don't exist anywhere except centralized exchanges for the most part, and sometimes on their native chain. And so that to us just seemed like an obvious problem.
Nothing said on Lightspeed is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed. Hey guys, welcome back to another episode of Lightspeed. Today I am joined by Saeed, CEO of Wormhole Labs, incubator of Sunrise. It's become a bit of an asset and go-to-market bridge for non-native assets to come over to Solana. So glad to have you on, Saeed. How are you doing today?
Pretty good. Awesome to be here. Thanks.
Yeah, glad to have you. Glad we could get you on. I think there's been this strong trend that the Solana kind of community and ecosystem has been aligning around in recent months, which is trying to, I think for a while it was sort of like Solana is a chain, you can build great apps because it's, so fast and has lower latency than competitors. And now there's more of a focus around, we want to have all types of markets, all types of assets on Solana, really make it like this sort of like future of on-chain trading, basically. And so I guess Sunrise and, Wormhole's part in that have been bringing more, non-native assets over to Sol. But I guess maybe more historically, there's been sort of, there's been difficulties with bridging solutions in the past. I guess I'm curious, like, if you can maybe walk through some of the like historical pain points that we've had to work through. Because I want to say, if you step back a few years, it's like using a lot of bridges were quite painful in terms of, maybe you're waiting 10 or 20 minutes just for something to land from one chain to another. Maybe the liquidity is not so great. Maybe you're working with, there's AUSDC and there's BUSDC and there's CUSDC. Maybe talk through some of those solutions such that like we've gotten to a point now where Sunrise as like a product and a approach is like something that you can actually bring to market.
Absolutely. Yeah, I mean, I think there's been no shortage of flack over the years directed at bridging and bridges specifically. And I think it's because it's so integral to the on-chain user experience. So on the one hand, it's very important. It affects the products that people can build on-chain. And so it is an important problem to solve. You kind of gave a good rundown of some of the most famous kind of technical issues that people were complaining about, or that a lot of builders such as ourselves have tried to solve over the years. One of the big ones is obviously liquidity fragmentation, right? When you have all of these different types of assets meant to represent the same asset, fragmenting the liquidity for those markets on those chains, confusing users. Am I buying the right thing? Am I transacting on the right thing? Am I sending the right thing? All of those questions cause a lot of anxiety within a blockchain, but it also causes a lot of anxiety when you're trying to move assets from one blockchain to another and not really understanding what are you going to get on the other side, and will there be sufficient liquidity? Will there be support for it? Will I be able to utilize the infrastructure on that destination chain correctly, right? I think a lot of those problems, although there were technical solutions, I think a lot of those problems came from relying on the bridges themselves to kind of bring the assets to a wider blockchain universe, right? Taking it from its native chain, wrapping it, and then allowing for its use on another blockchain, right? And that largely happened because in the early days, projects didn't really think about multi-chain. They were too focused on just getting their application and their token and the different pieces of infrastructure that they needed to run on that specific native chain working and acquiring users on that chain. So thinking about multi-chain was just not part of the conversation. They didn't have the bandwidth, they didn't have the team, they didn't have the expertise to even like address that problem. So when, you know, other companies and protocols such as ourselves started to do it, we were allowing for that technology to be out there and available for anyone to use. That's when you started to see a lot of these different types of assets show up. I think the biggest change over the last 5 years has been everyone thinks about multi-chain first, right? How, regardless of where my native application or my token is first minted, um, from day one, projects are thinking about how is this going to work with Solana? How is this going to work with Ethereum? How is this going to work with the broader EVM space? How is this going to work with potentially the Move VM? And even further, outside, further along in the universe, right? But you think about private blockchains, think about things that some of the institutional players are doing with their own bespoke kind of permissioned assets and blockchains, right? So that fundamental shift where people kind of realize that, like, look, all economic activity in crypto isn't going to be on one blockchain. It may be concentrated. There might be a parallel there where it's like concentrated on 3, 4, 5, 10, 20, who knows, depending on how far into the future you want to look at. But there's likely going to be thousands of blockchains, and they're going to have, varying degrees of success and economic activity. And you likely want to have a strategy for at least being on a couple, if not being on as many as possible. And so when projects kind of understood the value and saw the success of these other alternative blockchains amassing communities, solving very specific problems that attracted their user bases, they now take the lead, right? And so we've built technology, we've adapted different types of technology that we had in the past to allow for that, where you can actually be the master of your multi-chain future. You can own the contracts. You can specify all of these different parameters, how you want people to interact with your token, all of those things, and you're doing it yourself. And so that has been an amazing development, right? Like it's really changed this problem with asset fragmentation, because you can't really compete with the team itself launching and saying, hey, this is the verified token address for my token on this chain, on that chain, on that chain. It's part of our multi-chain strategy. And you can even see it. It's not just crypto projects that are doing this. Like the DTCC announced last week that, in their announcement, in the headline of their announcement, they're like, hey, we are going to be tokenizing stocks, and it will be interoperable on multiple blockchains. That's how important it is. For people like me and our team, like we know that, like, we're one of the first calls that an institution or an asset issuer on chain, or a fund or anyone who's trying to issue assets on chain calls and says, like, hey, this is a very important piece, not only to our product, not only to our token, but also to our strategy. And so it's been good to see kind of that get solved in the right way, and it's still leverages the technology that we've built, but it leverages the fourth and fifth generation iterations of those. So yeah, and I would say like that's kind of the history. That was the biggest pain point. And yeah, that's where we are today, right? Where like everyone thinks first. Like even if you're launching a new project, you've got ambitions to either be on 5, 10 L2s, and you have to figure out how that works and how there's going to be liquidity across those. And even more importantly, like most projects are thinking about being on different types of blockchains that have like completely different consensus models and run completely different programming languages and different VMs, right? And that's 5 years ago they would be like, hey, that's not even something that we're going to even think about. Today it's integral to launching a project in crypto. I think the bar has just been raised.
Yeah, I think that makes a lot of sense, and I would agree with your statement around tokens teams wanting to be in more places, especially when you look across. It's like the Solanas, the Hyperliquids, like the places where users are sort of wanting to act and transact. It's like teams want to get their assets over to these venues, and they kind of have to figure out that piece of the puzzle. I guess, can you speak to then like this sort of Wormhole's been around for a long time, and even products like built using Wormhole, like I don't know, I can think of like Mayan and some of these other like sort of like bridge apps built on top of like the technology there. What is different and like sort of being solved with this particular effort with Sunrise and bringing like assets over to Solana? Like, what are they specifically solving for here?
Yeah. I'll take a step back and kind of address your first statement, which is like you see Solana wanting to list all of these assets, and like there's like this um, very clear push and initiative to do this. Um, I would broaden that out, and I would say that that's happening across the space. I think trading is kind of the number one most important vertical that has PMF. And so you're just seeing it across the board. Like Solana's doing this, but almost every major player, like, whether they're, these are public institutions, these are exchanges, these are L1s, these are L2s, people like the DTCC or people like, JPM or people, or Stripe, like all of these things, all of these different types of players are kind of maneuvering right now to say like, who is going to be one, two, and three when it comes to on-chain trading. The more TradFi, like traditional finance players, are like, hey, we have bought in to this idea that the global financial system is going to run on crypto rails. Not all of them, but a significant players in that space have bought into that vision, and they're willing to spend billions of dollars to do it. Same conversation is happening for the centralized exchanges. Like there are a lot of benefits to being centralized, but they see the long-term benefits of a decentralized infrastructure stack that disintermediates a lot of the things that they don't want to deal with anymore as being important. And so they're going for the same like pie, if you will, or the same market, but they're going from from a different angle, right? They're like, hey, let me you know take Coinbase for example. Let me also have a very, very deep technology stack that I'm developing, that applications are building on, that is also providing a cannibalizing business to my centralized exchange. But because I think that is where the world is going to go, this is a worthwhile endeavor. And I don't mind that some of that volume isn't going to the centralized exchange. It's going to all these decentralized exchange apps that are built on my technology stack. And then you've got the L1s and the L2s that are just building purpose-built infrastructure specifically for on-chain trading. So Solana kind of making this massive push to list every asset and to be the number one venue for trading, whether it's crypto tokens or kind of traditional financial products, whether it's stock, commodities, currencies, whatever, right? Is not something that's unique to Solana. It's unique across. It's part of every like boardroom discussion and H1 H2 planning. I think with all of the major players that are entering the space or have been in the space. So now we come to Sunrise, right? So what is Sunrise really doing, right? Sunrise is really just trying to take a lot of the disparate pieces of technology that exists today, right? Because like I said earlier, one of the core components, one of the core pieces of infrastructure that each one of these players is going to need to solve is interoperability, right? Like not all these assets are going to live on my chain or my, XYZ in my app. And so I want to win as being the number one venue for trading in this new world, right? So interoperability is just a key piece across that problem set. And so you've got these different solutions that exist. You have to put them together, but they need to be put together for a coordinated effort, right? Like you want to spark these markets, right? And Sunrise was really us just looking at the market for 5+ years and watching its evolutions and kind of wondering to ourselves, like, there's a place like Solana, there's a place like Hyperliquid, there's a place like, Base, what have you, right? You have traders there, you have users, you have tremendous amounts of capital, on that chain, but you won't see a Zcash on Solana trading anywhere near what it's trading on centralized exchanges. Like the volumes are zero, or it doesn't even exist. Or these new token listings, right? Like just because it's from a new blockchain You'll see no economic activity produced on these other blockchains that do have very sophisticated traders. All the HFTs are connected, all the market makers are connected, big whales are obviously trading a lot of volume. There are assets there that are doing native assets doing massive amounts of volume. But for some reason, we're in the bridging space, we like to see economic activity like across chains and seeing how the flow of funds move and like what drives people to move from one chain to another. But for some reason, you've got these massive markets and they don't exist anywhere except centralized exchanges for the most part, and sometimes on their native chain. And so that to us just seemed like an obvious problem, right? And it wasn't really a technical problem at this point, right? Maybe 3 years ago it was a technical problem. There were a lot of reasons for that. But in 2026 and end of 2025, like there was really nothing stopping it except that you didn't really have a coordinated effort with people who had subject matter expertise, who really understood what it took to take an asset from chain A to chain B. Make sure that that process is really good, like as smooth and as secure and as reliable as like passing a certain bar, right? Also coupling that with a go-to-market strategy, working with the team, working with the ecosystem that it's going into. And that takes a lot of effort as well, right? Understanding what does it take to spur a market, to light a market up and see people use it, engage with it. And, really bad markets have a tough time actually like gaining liquidity, right? One of the more famous lines out there is liquidity begets liquidity, right? Like I don't want to go to a really bad restaurant and like hope the food gets better on my 5th time or my 10th time going there. Like I want to go to the restaurant and I want the food to be good, and I want I want a competitive experience, or else I would just go somewhere else that is able to service my needs better. So I think that go-to-market strategy is really important, and it's not one that you can do alone. You have to do it in a very strategic way with a bunch of different partners and different people that you've worked with for many years in the past to bring assets over, to manage how that looks like within an ecosystem. And you have to work really closely with the project on this too. And I think the last thing is liquidity, right? And liquidity management and understanding like what that looks like on day 0, minute 1. What does that look like versus first 24 hours, 48 hours, 2 weeks later, a month later, and who needs to be involved in that, what the plan should look like there. And so combining all of those things are kind of complicated, but they all exist, right? The technology exists, the technical issues have been solved. It is possible. It just takes a deep understanding and the ability to actually make certain outcomes happen, right? And so we try to do that with Sunrise. Like that's really what people, have reached out to do. We've got this massive pipeline of projects that want to list and just be available. Like listing just means I just want this to be available and competitive, right? Anyone can bridge a token over and be like, hey, I'm on Solana. But they're not really going to give you an experience where like users on Solana are going to be happy, users bridging to Solana are going to be happy, unless you are very thoughtful and you engage with the broader ecosystem. A place that like Solana has been a very good partner in this is because they actually have the community. So they've got the goods, right? They've got a big ecosystem of not only dApps but those dApps have also been able to draw in a massive amount of capital and users. And so you need to service those people. And so they've been very engaged. The Solana team has been very engaged here, and the Solana community has been very engaged here. And I think those are a couple of the secret ingredients that make something like this possible.
Yeah, I think I like a lot of the points that you made, kind of stepping through it, like against this backdrop of, you mentioned some of the centralized venues and, Coinbase, et cetera. They see some value here in bringing some of parts of their business on chain. And so I think it's interesting to sort of see the reverse from these on chain environments where it's like historically, new token launches and it's very important that it gets listed on Binance. But we haven't been having this conversation about, well, what about getting it listed on X chain or Y chain or, this perps exchange or that perps exchange that's on chain. So it's been interesting to see that sort of like conversation evolve as, I don't know, I think that the conversation has generally just been more focused on, well, that's kind of where it's always been done, right? You launch a token and it's like, okay, make sure you get listed on all the tier one exchanges. And that conversation hasn't been around, okay, well, make sure you get it listed on, that it's trading on Ethereum mainnet or Solana or, now Hyperliquid or this, that, or the other venue. But that's becoming a more core part of the conversation now.
Absolutely. Absolutely. Yeah. It's, there were a couple of token projects in 25 that really showed that you don't need tier one exchange listings in order to actually have a good token launch and to actually create a community and do you know, fulfill some of the obligations or objectives that you had as a token project. Um, yeah, and I would say that like it's it's super interesting to watch because like one thing that I don't think people talk enough about is like the airdrop meta, right? And how that like at this stage in my life, I'm not a very big fan of airdrops, having seen so many, right? Um, I think it's a matter of like the reason people airdrop is one to reward a community that was there supporting them. But I think that's very much like a vanity statement, right? Like ultimately, what you want to do is you want to make your network valuable, right? Um, and so that's one. But I think the other thing is, and what's more important is distribution, right? Like I want people to be invested, and I want people to kind of get involved and provide some utility back to the network because they've received the token. And so when we think of distribution, this is a very important issue for any team that is thinking about launching a crypto token. How many teams are thinking about the quality of that distribution, right? If you look at, Bitcoin, for example, you had to do some work. It was a proof of work chain. You had to actually contribute to it. And that mattered. That, severely increased the quality of that distribution. You got believers, you got people who read the white paper, who understood what this meant, and they were coming in and they were doing things in order to be a part of the network. I think with these cross-chain asset listings, right, you actually get a really great distribution because you have one of your primary target audiences right there. There's no better audience than saying, I want to target Solana DeFi traders or Solana DeFi participants, right? And I know I don't want to just airdrop their wallets, right? Like I know these guys are trading on, a DEX on this chain, right? No, I want them to be like, hey, I've done my work as a project to go out there and tell the world about why we exist, why we're doing this, why it makes sense, why it's going to provide some value, um, over a period of time, right? And so if I do my things right, like then I should be targeting those users, and I should want them to say, "Hey, this is great. I'm on this chain. I'm going to be a token holder," right? So like that was one of the great things to see with Mon. Within 72 hours, 48 hours, with the Mon listing, you had 10,000 Mon holders. Fast forward 3 months later, 2 months later, they're still like close to 9,000 Mon holders. Those are real skin in the game. People who actually uh, are a legitimate part of your community, right? They weren't just kind of given something and then maybe 60% of them sell it and the other people don't even know it's in their wallet. Like these are legitimate people that are like, hey, I've read up, I've seen what this project's doing, I really like what they're working on. I'm willing to go and take a couple dollars from my pocket and say, hey, I want to follow this, I want to be a part of this, I want to root for this, and I have real skin in the game. And so the quality of that distribution, that doesn't really cost the project anything, right? It's not like the project had to just go and give out free money. No, these are individuals that came in and engaged with that token in, I think, the highest signal way, which is like, hey, I think you guys are going to be successful in the future, and I'm willing to put my money behind that. So the quality of that distribution is very high. And so when I think of like, hey, how do tokens launch in the future? There's a lot of tokens, or there's not a lot. There's like a couple of projects that are like, hey, I just want to be on my chain, and my token is like my product, right? Like that's what's going to drive people to my chain. It's like, for how long is that really going to be a sustainable process, right? Like, or a sustainable strategy? No, you should target these very, very very relevant audiences across all these different blockchains and get them to kind of believe in your vision and take that big step of saying, hey, I'm willing to put some real skin in the game to be a part of it. And so I think as a distribution strategy, especially relative to airdrops, and then maybe also relative to centralized exchange listings, because they are so expensive and they have gone very, very, very costly to do. This is one of the best ways, I think, in crypto, and it will continue to be better and better and more impactful over time, um, to get a great high quality distribution.
I think that makes a ton of sense. I guess for some, some well-funded teams, it's maybe not an issue for them today. Monad's maybe an example of that, where you have the large exchange listings. They did the sale on Coinbase, but then they also, worked to have their token listed on, various chains here with, via Sunrise to get it on Solana, for example. I guess the interesting thing about that one is that's, maybe one of the first cases of, for layer one blockchains and like the token associated with them. I think that mentality you walked through, was kind of the standard for a long time, of like, okay, this is the chain, this is the gas token for the chain, like this is the venue, like for the token, it lives here, and like the activity around that thing will all exist here. And Monad is maybe one of the first examples where it's like, no, actually it would be great to have the token, live and trading on Solana, or maybe it makes sense to have it on Base or Ethereum, these other places as well, just because, it can get out to a, trading audience or retail audience, or maybe there are other, trading firms that exist there that don't exist on, the Monad network today, for example. I guess, I don't know, how do you think about some of the sort of trade-offs there? Is that, and maybe that's really only like a network sort of issue that arises? I would imagine it's much less of a contentious topic if you're, say, just an application, and then you want, users to buy into sort of your, token that's related to the success of like your business, so to speak. But for Monad, it feels like more of a big step in terms of like a network sort of like seeding some of its token over to another network.
Yeah, I mean, I think that's generally the case where this is probably going to be more relevant for L1s and L2s and just chain launches. But I have seen actual applications, trading applications that have limited, that have tried to limit. They can't limit it forever, right? Like Lighter is a good example of that, where Lighter did not list on any centralized exchanges, listed on their DEX first, and then made the token unwithdrawable, right? And that was clearly uh, a strategy for them. Ultimately, they did end up listing on centralized exchanges, making the token withdrawable, and now the token, is on Solana and is on, Monad and other blockchains as well. So I agree. I think it's this is the these are a small group of the audio or of the market set, but yeah, I mean, I think, look, it's it's definitely like people are figuring it out as they go, right? A lot of people saw the Monad launch and they've seen some of the subsequent launches on Solana, and they've been rushing for it. They want it. I mean, we just saw Starknet get super excited about getting listed on Solana, right? That's, people are taking a different view on what really draws people to your chain, right? Do you believe in our success is predicated on vampiring other blockchains, and really, like, that's, the current user base in crypto, that is what we're competing for? Or are you looking 5-10 years down the road and saying that, like, look, you know this is, barely a percent of the global market who's going to be using on-chain technology, and that's what we're really building for. That's where we get, we produce the most value in the world. That's where we achieve most of the goals that we have. And I think for those teams, like, it's very clear, like, yeah, this is not our draw for people to use our chain. Like, as many people that can get involved and talk about this and introduce their friends about it, like, that's what we should be doing. Like, an interesting example is like the Base bridge to Solana, right? There are many bridges that connect Base and Solana. It's one of the most popular routes on on Wormhole and many bridges that are built on Wormhole. Um, so that's a really good example as well, which is like they're going for a strategy and they're trying new things. Coinbase, to their credit, is trying a bunch of different avenues. They're also trying to be, um, like we'll see what the next couple of months look like, but they're trying a bunch of different things, and they're gonna, the data will speak for itself. It's like, did we achieve our goal? Did we clearly define our goals? Did we achieve it with this strategy? What is an alternative strategy that we can do that can maybe um, achieve those goals? And so it's a great time to be in interoperability, or at least to be in my seat, because I get to see a lot of these experiments play out, and I'm a part of many of them, not all of them, but many of them we are a part of. But yeah, extremely excited to see how this quarter and next quarter go, because there are a lot of assets that are listing all over the universe of blockchains. And we'll see who does a good job, and who pivots their strategy.
Yeah, I would certainly agree with you. I think certainly, with Coinbase as the example, they've been leaning more heavily into enabling users to trade assets, on base chain, assets on Solana. Like this has been a kind of a strong part of their approach, at least kind of entering into on-chain recently. And so certainly if you're in the business of getting assets listed in different places, that's exciting news to hear, knowing that they're coming to you basically and saying, hey, we want to be able to trade a bunch of these things. How are there like technical challenges, I guess, going back to some of these, assets where maybe there are different like utilities of some of these things, like talking about Lighter or Monad. It's like, Monad is the sort of the native token of the Monad blockchain, and maybe is involved in sort of um, the validation rewards or some staking mechanisms there. Lighter might have some their own kind of mechanisms, and maybe you can stake the token, maybe you can participate in governance or earn rewards, certain things like that. Are there technical challenges associated with that when it comes to taking kind of like a variety of sort of different assets and saying, hey, we're gonna port those over to Solana? Do you have to think about that, or is it really just let's enable a representation of the asset on this other venue and let people trade it, and we're not as concerned about maybe the kind of the technical abilities of what that token does within that platform?
Yeah. Well, the first step there is we want to always ensure, and that's part of making sure that you bring the assets the right way, and you do all of that work, and you work very closely with the team on that execution point. But making sure that the assets can go back to their native chain and then start leveraging whatever utility is available for them there, right? So that's an important key point. We always focus on that, and that's largely been the case for the projects that we've worked with. The second thing is like a more kind of like a futuristic thing, which is like, can you have cross-chain utility, right? Can I stake my Mon on Solana? Does that make any sense, right? And there are people who are exploring it, and these are like great projects to fund and grant, and and we'll see what comes of it. But but those are more futuristic. The one important use case that at least on the at Wormhole Labs, that we've really love to contribute to, and think is very important to kind of make sure is available for asset issuers and for token holders, is cross-chain governance. And so Wormhole has an open source multi-gov uh, suite of technology tools that is leveraged by Uniswap and by a bunch of different big players across the space, to make sure that regardless of where your token holders are, they can vote for governance, right? This is super important for Uniswap, for instance, because you have multiple deployments across many chains, right? And so if you're a token holder there, you can leverage multi-gov, and you can participate in, the fee share vote, right? Or determining what the criteria for certain deployments on a new chain are. All of these things are important things. So we've made sure that basic utility is available cross-chain, and we've had that for quite some time. We've had some great adopters of that technology. That'll be the case, and we'll continue to contribute to those projects. Yeah.
Gotcha. And then you talked a bit about some of the conversations you're having with a bunch of teams that are working on different projects, sort of within this space. I guess I would assume that's pretty meaningful. I think what's interesting to me when I think about the Solana ecosystem in particular, maybe in relation to some of these, kind of asset listings, is that there is a very competitive culture there. These teams are really, I don't know, in Solana in particular, we see this like multi-product DeFi approach where it's like, Jupiter is building this thing and that thing and expanding into a whole bunch of products, verticalizing, horizontalizing, and like really anybody's lunch is sort of like open game to like go after and say, hey, we're also going to build this product and we're going to compete with you. But it is, I guess, in an interesting way, cool to see that all of these teams also align behind some of these same ideas of like, oh yeah, let's list the Monet token, let's list the Lit token. We'll work with you, and we'll kind of all get behind on that go-to-market strategy, and sort of coordinating behind the launch of that on the day one listing. How, I don't know. Is from your POV, is that something that comes across as very natural and just the connections you have? Um, I find it unique that within this ecosystem, it's you can see such competitiveness, and then on the other hand, it's like, yes, we're all aligned behind the same kind of like common vision for um, you know path forward for Solana.
I think we enjoy a unique position in the market as a neutral party, right? As a party that has helped a lot. We've been core infra, right? And so like we can have these conversations, like intellectually honest conversations with all of the market participants within a blockchain. It's not just Solana, across the EVM space, across the MoveVM space, right? So these are hundreds of blockchains, and so like when we come to those conversations, we come in good faith and we're very clear about like, here's what the outcomes are going to look like. Competition isn't going to die. You guys are already competing. The question is, do you want to compete on this? And they are very, very competitive. I do think there's a broader point to be said here, right? So like, because of our position, I think it's easy to have these conversations, and we've worked with these teams for some of them 5+ years, right? To help bring assets, to help, remember there were no stable coins on Solana. There were years with no stable coins on Solana. you know, there was no Oracle on Solana, right? So DeFi couldn't have existed without those two components, in my opinion, right? So it's very easy because of that position to be able to have these conversations. They're relevant, they're appropriate, and not every time people want to engage, but most of the time, I think people kind of understand the value prop. But I think the broader point there, right, which is there is competitive is or crypto is a very adversarial, like almost from the beginning, everything is looked from an adversarial perspective, right? Any system that's being designed within this industry is because it's decentralized, because it's supposed to be trustless. You have to think of worst case scenarios. You have to build for, you know, an adversary trying to take advantage of your architecture or your system design, right? And so that spills into, the competitive practices for businesses, right? Where it's like, look, if I can, I will, and that is what one of the true spirits of this space, right? And that explains a certain level of the verticalization, right? I think you have this tug of war between composability and verticalization, right? Where it's like one of the great promises of crypto is that all of these smart contracts are composable with one another. If one guy is selling bananas and you're selling but you can also sell bananas too, and you could just do it. You don't even have to talk to that guy. I can surface, all of Lido's products or Uniswap's products if I wanted to, right? And I could just hook into those things. That composability is very, very powerful and very exciting, and draws a lot of builders to the space, and allows for very very feature-rich products to be produced, right? At the same time, if you want to monetize very well, you start to say, hey, look, I'm providing more value here, right? Like maybe I have a direct relationship with the end user. right? Why should I be paying the guy who sells bananas uh, a cut of my the user revenue that I'm generating? And so you start to have this, build or compose kind of argument with yourself. And so you're seeing a tremendous amount of verticalization. And that's happening on the infrastructure layer too, right? I mean, we saw Circle acquire Axelar, right? So they're like, hey, we're going to build this chain. We're going to compete with blockchains that are, traditional, let's say like a Solana or an Ethereum or pick any L2. We're also going to compete with Tempo and Stripe and, for payments, right? And so you're seeing verticalization even happening there, where it's like, if you have a core component that's very important, um, I either need to compose very well or I need to verticalize. Especially if I'm going to compete in this new world where you have these big entrants coming into the space, willing to spend hundreds of millions, if not billions of dollars, to compete. So I expect to see that tug of war continue. I expect to see way more verticalization. I also expect to see people compose more, right? People have built some great brands. You see a lot of these new applications that really, uh, are very targeted. A Morpho, or I hate to say prediction markets, but that's one thing maybe, right? Like, uh, so let's take those two examples, right? They could be offering a slew of DeFi products that they don't currently. Some of them have decided to compose, right? In certain of these markets, like, you're able to provide yield, but it's generally not you providing it, right? For a lot of the Morpho integrations, like Coinbase's Morpho integrations, for example, like, they're able to compose that. So that's a very interesting to keep watching, that tug of war between composability versus verticalization. I expect to see more of both.
Yeah, I would agree with you, and I think you made a great example there around some of these particular platforms, and maybe are not quite at the point where they're really branching out quite yet as a platform. Maybe they're still competing on a core piece and trying to win that really hard before sort of spreading out their tendrils. But certainly think it's coming, more verticalization, but also more composability. And I think a lot of the trading front ends are making this pretty apparent. Like, we've seen, trading applications, trading bots on EVM and Solana sort of like go through these market cycles now, where now if you're not offering, spot trading plus perps trading plus maybe even prediction markets plus other things, it's like you're not even in the race at this point. So some of those sectors kind of keep moving on. Maybe thinking ahead, like, going into, we're in 2026, but like thinking forward, like throughout this year, what is your view? Like, where do you see, these asset listings continuing to go, whether that's like Sunrise and Solana specifically, or even more broadly? You spoke about, lots of chains, lots of teams are thinking about, new assets, new listings. What is top of mind? What do you think is going to be like kind of the kingmaker, the key for 2026 in terms of like getting assets on your platform? Is it equity perps? Is it stock tokens? Is it, RWAs? What are we thinking about?
Yeah, I mean, I think it's, and we've spoken to a lot of blockchains that, hey, we want a Sunrise, you know, um, but just like the core technology itself, like, anyone can list an asset on any chain. It doesn't even have to be anyone very sophisticated. You could just go use Wormhole from any front end that supports Wormhole's technology, and there you go. You've listed an asset. It's now available. And so when the technology solutions exist, it comes down to, have you done the necessary work with your own ecosystem, right? With your community, with your user base, right? To make that a fruitful endeavor for asset issuers and for yourself, right? So I could go to Blast today and launch Sunrise and launch 50 listings, but is that going to be valuable for Blast? Probably not. Is that going to be valuable for us? Probably not. Is that going to be valuable for the asset issuers? Probably not, right? So you have to do that work. I think you have to get yourself to a position where you can actually, service an existing user base, so that you do grow and people do decide to come and realize that, hey, you are the full catalog of products. And then on the second question, I think for us, we're going to be focused on asset issuers that have done really well in their own projects when it comes to being very thoughtful about the technology that they've built. Plus, these are all pluses, but plus have been very thoughtful about their go-to-market strategy and has, those two components are very important. And understand the complexities and the type of work that needs to be done in order to ensure certain kinds of liquidity, right? So if you want to be on 100 blockchains, do you understand what your liquidity strategy is going to look like there, right? Those projects are very good candidates for Sunrise. And when it comes to certain asset types that we're very interested in and very focused on, we want to lean in. Obviously, we understand crypto tokens very well. We've done those. We want to lean into some of the other asset types that people are kind of demanding. We've done a lot of work with Securities and BlackRock and Apollo and Hamilton Lane, some of these traditional asset managers and tokenization products. And so we do want to see tokenized equities. We want to see tokenized financial products, start to list and have legitimately deep, efficient markets on chain. And so that is a primary focus. We've already done a lot of work in this space. So it's not like we're starting from zero. Now it's making sure that you've got the technology side done. You do have a certain level of go-to-market. How do you combine it all and start to see these assets really light up on Solana and other blockchains?
I love that answer. I guess, can you speak to, I feel like we might be running into a new sort of like fresh liquidity fragmentation issue in that there's a lot of, RWA platforms, products out there now. And it's like, okay, we're going to have our, X stock tokens and our R stock tokens and our Y stock tokens, whole bunch of different issues, maybe because, this particular issuer or, asset manager is looking and working with this particular product team and saying, hey, we could tokenize and put our assets on chain, ABC, and we'll make, this type of token to do so. I guess, how do you work through that? Like, do you have to collaborate with a bunch of names and say, hey, we're all going to kind of get aligned behind using this technology? And so even if, BlackRock and Hamilton Lane both list a SPY token, we don't have 10 SPY tokens from 10 different issuers, and then we're kind of repeating some of those historical problems that we've had.
Yeah, I think that is certainly the case today. And the way that I think about it is you have to make a bet. And the bet is really like two things. Does the market care about provenance and legitimacy and regulations, right? If it does, like within this asset type, the RWA asset type, right? If it does care about those things, then there's a certain path that you have to tread. That no one's really done it well yet. Everyone's working on it though, including us. And then there's the other path, which is like that stuff doesn't matter. As long as it says NVIDIA, then it's NVIDIA, and I'm cool with it, right? And there's that path as well, right? I think, from our standpoint, we're looking 5 years down the road, 10 years down the road. It's clearly going to be not the, hey, I don't care about the regs, I don't care about all, like the way in which these assets are brought on chain. If you're looking that far ahead, right? Maybe in the short term, these things will outperform. Who knows, right? The market is always maturing, and the bar continuously gets raised every cycle. But I can safely bet that because these assets themselves are securities, you have to work with people who understand that space and have brought securities on chain. We power BIDL's cross-chain infrastructure. We help bring that on chain to all these different blockchains. That is a security. That is a regulated security. It has a lot of restrictions. It has a certain way it needs to be brought from chain to chain, and how it's minted, and all of these things have to be, cleared with the SEC, cleared with the fund manager, which in this case is BlackRock. So that this is not a simple thing to do. And so when you're talking about bringing actual securities on chain, I think if you're looking at a long enough time horizon, that's going to be the right way to do it. I don't think anyone's done a great job of doing that to date. Um, I do know that a lot of very, very smart people who are doing it the right way are coming to market in the short term. We have an S&P 500 token that we did that was blessed by the Dow Jones Industrial. Like the Dow went and said, "Hey, this is the representation of this asset that we are okay with because of its implementation." Obviously, Biddle, Acred from Apollo, and the list goes on and on. And there's many more kind of launching this year. So I think if you have a long-term time horizon, just listing the asset isn't enough. And so that fragmentation that you mentioned should resolve itself on the long enough time horizon.
Yeah, I think that makes a lot of sense. Certainly would echo your sentiment that, I mean, there's a ton of interest. A lot of traditional financial firms are very interested. I mean, we just saw the NYSE, another statement or kind of like pre-announcement of saying, hey, at some point we're going to get to 24/7 markets. It's going to be digital on chain as part of how that infrastructure works. Nasdaq, they've talked about, had similar statements and sentiment in the past around kind of like that as a foreseeable future. I'm curious, you mentioned at least sort of the difficulties here, working through the regulations, working through the restrictions associated with, you know, actual equities and bringing them on chain. Do you think that those are going to cause like maybe a shakeup with the way that things currently work in terms of like everything's permissionless, no KYC? I can just go in, to my favorite app and trade, and they don't need anything to know anything about me, and I can just trade Nvidia stock? Or will some of those things have to change up to sort of fit what the regulators want to see? Or is there a hybrid model where we get a little bit of both, and that's okay for everyone?
I think if nothing changes, from the regulatory front, so like SEC guidelines, SEC rulemaking, uh, the U.S. Congress passing the Clarity Act or some version of the Clarity Act that permits this to happen, you'll likely have very restricted access, right? From our perspective, it doesn't change the implementation. The implementation still has to abide by whatever international regulations, not just US, but international regulations are there. And we're going to help projects do that. But the end user experience and the availability of those assets for trade in public blockchains, it really rests on that. And, we had some positive signs going into 2025 about that. And, I think we're probably in a low right now, given what happened last month, but, you know, we'll see. We'll see. That's probably my best answer. Hope that we do get very sensible clarity when it comes to regulations, because there's a tremendous amount of great companies and projects and individuals who would like to build um, for that financial future that everyone keeps talking about.
Do you think, maybe as one follow up on that, do you think it's a failure if, or maybe for crypto, if the regulation doesn't change, like sort of to the benefit of maybe how a lot of people within the industry would sort of ideally view it? Like, is it still a bad thing if, pick all of your favorite firms, right? BlackRock and Fidelity and XYZ and this, that, and the other company, like still bring a bunch of their business on chain, but like, maybe some of the restrictions just have to be followed kind of to the letter of the law as it stands today, right? Maybe more users need to KYC to interact, but now you can trade stocks globally via, you know, XYZ firms on chain 24/7 global hub.
I wouldn't see it as a failure for crypto. Um, I would see it more. I would say that crypto will adapt and will go to favorable jurisdictions, and largely, you know, governments who don't take this seriously and understand the power of trustless finance and decentralized finance, like the whole world's telling you it's pretty amazing. Um, they're going to lose out, and they're probably going to have to revise their strategy if this industry starts to adapt to it. Now, if entire TradFi starts to run on crypto rails, but it's not really like, it's like crypto rails, but it's not like public, right? It's all very managed, very centralized. Kind of cool, definitely lends a lot of legitimacy for the space, and sets you up for the future when people kind of come to the realization that, um, having a financial system that's the most open, right? We pride ourselves as being, the best capital markets in the world. Whether you live in Europe or in the US or in Singapore, like that's a big thing that you always strive to be, right? The number one destination for capital. It's going to be hard to compete in a world where, you have a lot of these restrictions and others don't. And so you may not be the number one destination for capital, right? It also hits on the second thing, which is, there is a very important conversation and policy shift when it comes to stablecoins. That legislation passed, um, but that legislation passed because people in the room, kind of looked at the issue at face value and said, like, why are you telling me that stablecoins are bad for the dollar? They're one-to-one backed. These people are taking those dollars and they're buying U.S. Treasuries. They're helping fund our massive deficits and borrowing. Um, so like, how is this bad for the dollar, right? It's very hard to make an argument for that. As we go into the future and we kind of see, the within the U.S. government context, we see like, okay, so they've got it, right? They understand it. They understand that, like, look, crypto and this industry has been a phenomenal way to find and service foreign dollar demand. There's dollar demand all over the world, and the current financial system locks all of those people out of it, right? I don't have to go convince China to buy bonds when they're selling. I don't have to convince, these countries to buy U.S. Treasuries. There are millions, hundreds of millions, billions of people out there that says, "Hey, I'd like a little bit of that. I'd like to have dollars," right? And they're giving their dollars to Tether or Circle or World Liberty Fi or whoever, right? And they're saying, take my dollar, give me a digital dollar that I can hold in my country, potentially spend in my country, um, and you do whatever you want with that dollar. And all of those guys are under a regulatory framework that allows them to be 100% backed and use that capital to help fund the U.S. government. Why would you not want that, right? I think, the reason why the Genius Act passed was because the government finally understood that, hey, this is actually great. Our financial system is limiting the amount of demand for our treasuries, so let's let this happen. So I think if they don't really like, you know, if they don't appreciate DeFi enough, they're going to lose some of that momentum, because DeFi is a way to get people involved, a way to get people into stablecoins, get comfortable with stablecoins, comfortable with holding stablecoins. And it is the tip of the spear in terms of like reaching all of this hidden or locked out dollar demand, and that's just for the U.S. context, in my opinion. So I think that's also like a tailwind. Hopefully, at some point, even if it doesn't happen now, in the future, it will happen.
Yeah, I think that makes a lot of sense, and you certainly see, countries with maybe unstable regimes, unstable currencies, maybe as a result, seeking those dollars. And they have a really simple and easy way to get access to them now via stable coins. And so, yeah, if you're the U.S., it must be a great feeling to say, hey, there's people that want my dollars that couldn't have them before, and I have a really easy way to export them to them in a kind of clean and simple digital way. Um,
Yeah. When
so
Tether's the number 7 buyer in the world of U.S. Treasuries, I mean, you got to look around and take notice and be like, okay, maybe this system isn't efficiently servicing the demands that is out there.
Yep. I think that makes a ton of sense. Well, Saeed, it was great to have you on. Great chat. I don't know if there's anything you can share with me in terms of any upcoming exciting token listings or launches. Maybe that's too private to share, but I guess if are there things that folks out there should be excited for coming in, back half of Q1, Q2.
Yeah, I
Otherwise, it was
think,
great having you on.
yeah, no, I mean, I would just say, hey, um, you know, follow us on whichever platform you use, Twitter. We're going to be announcing a bunch in February, and we're excited to kind of like help projects get listed and get exposure to across the entire crypto universe. So thanks for having me on. This was a great chat, and thanks a lot for your time.
Awesome. Thanks again so much, Saeed. And to the listeners out there, we will see you next time.